All right, today we're going to be going over what is an area of interest, how do we use it, how do we identify it, and how do we react when price comes into it. So the basis is just going to be 4 or 5 key points, and I'm going to be showing you how I personally use these areas of interest, identify them, and react to them to be placing, high probability and well thought out trades. So let's get into it. We're looking for three, 4, 5 main things. So it's a lot to cover, but basically the reason we want to be going over and finding out areas of interest is because this is how we're spotting potential highs, potential lows, and it makes it a lot easier for us to predict or find probable causes for where the market is going to be going, what areas it's going to react to. Anyway, let's get into it. So just getting into the basics, what we have is, if we take all of these boxes off, obviously the market goes up and it goes down. Each candle is a representation of price action within an hour, or obviously change the time frame, change what each candle represents. Anyway, we're here on the 1 hour time frame and we're looking for areas of interest. So in the previous couple days before the weekend, we'd had this key low right here, and then we'd also had this high up here. Now, after that high being created, we had this massive spurt downwards, creating this new lower low. So obviously, if prices decided to stop here, there must be a good reason for buyers to be coming in here. So this is our lowest low point that we can find. Now, when we're looking into the future, say we'd had market stop here, we only have so much information. So we're looking always to the left to see what price is going to react to, or to help us determine what price is going to react to. So we're looking to the left, we spot these 2 recent lows. So obviously 2 recent lows, now it's been broken. For those who have covered support and resistance, supply and demand, this will be a lot more easy for you. If not, the concepts are when a new or recent low is broken, it turns into potential support or resistance. Now, this low has also, we see it being respected here, coming into this level kind of here. So that's the very tip points of that. So it's just trying to help us gauge areas. Obviously at these areas, we're looking for reactions, but we just need to at least be able to identify our areas. So this isn't too great of a representation. There's a lot going on in this chart at the moment. Oops. Let me just get rid of some of this stuff. Alright, so there's quite a lot going on. Anyway, if we can simplify this now to the most recent price action, after this massive move to the downside, the most key area we could find is this little order block right here, order breaker, whatever you want to call it. Now, what we do to spot this order block is in this massive sell move, there is one green candle. Now, this green candle here basically represents that price had come down and some buyers had come in to get a better price before being destroyed again by the sellers. So this is where people are now aware that there is a bit of indecision at this level, but it is stronger as a seller's point. So as we can see, price has come into this level, it's swept above it, but it's respected it, and it's come down to make some new lower lows. Now, this is the first little rejection at this level. What tends to happen before a breakout is there's a little bit more consolidation. Now, this price action was very iffy, very weird. What had then happened is price had come down here. What did we do again? Recent low. There's obviously a little bit of indecision in here, forming liquidity. There's a lot of people at these levels. Boom, it's given us a nice entry for anyone who wanted to become buyers. Obviously, you can't predict this. You can't know for certain, but this is just to help you spot on how to draw out these levels. So what I've done for this level here is, this was the first bullish reaction after such a strong bearish push, right? So this is obviously a key level that buyers are like, nah, we don't want it going any lower than this price. Now, is it likely to come all the way back down to the bottom? If the sell pressure is strong enough. In this term, it wasn't. So we're looking for little bits of imbalances, key areas, consolidation areas, places where people have decided, nah, this is too low, like this is too cheap, we can't let it go lower. So anyway, a key thing for me was almost like, it's not quite a fair value gap, but there's a slight imbalance gap right here. This is the first strong candle. That's how I'd drawn that zone out. That zone actually reacted perfectly, as you can see here. Anyway, let's break it down to what we're looking at for the most recent day that's just been. So this is our recap. Boom. So that's what the charts are looking like pre-market, and then that's how they had reacted now. So looking at this move, we've now identified this as a key level. Now, because we've identified this as a key level, when the price comes up to this kind of level again and starts wicking and slowing a clear slow in volume, with also all of this imbalance left behind, we're looking for what is called a rebalance, gap fill, all of that sort of stuff. It all kind of means the same shit. So we're looking for a rebalance in market structure. So we're looking for price to come down anywhere into this level. Now, you're never going to know exactly where price is going to stop, but there are a lot of things that we can use to help us identify this. One thing I find is very key and useful is our Fibonacci graph. I'll take you guys through how to use a Fibonacci another time, but basically what a Fibonacci represents are points of the move. So this point here is where we started. That's the top, 0.5, which is obviously exactly halfway, 50% drawdown of that move. Now, the reason why this one here is gold is that is what's known as a Fibonacci golden ratio. I'll go over that another time, but it's very valuable. We'll get rid of that. So back to focusing on here. With this knowledge and with our new area of interest that has held price to reject a couple of times, we're looking for a rebalance at that price. Now, we're not always trying to see price come down back into these levels before it pushes up again, but we are looking to see it move down from this point. So this is on our hourly. Let's go down to our 15-minute. And what are we looking at? So on the 15-minute, we're seeing a slow in volume, and one last push to let all the sellers get in for the best possible entry. Now, if we go even smaller onto our 5-minute, now this is when it starts to get important. So high time frame areas of interest are where you're able to go then into this lower time frame areas of interest to help you spot your entries. The reason that we go down into the lower time frame a lot of the time is you can capture smaller moves for high risk to reward without having to just risk it on an hourly, say you enter at the top on an hourly, stop above the high, take profit at the low. One, you don't have full closure because you haven't had much, indication other than that you're at a key supply or key demand zone. Now, what we can do on the smaller time frame is if we know or if we're anticipating that price is going to drop down and go down from this level, we're looking for more confluences that can show us that this is a much more probable action. So what we can see here is we're at this main key level. So we can mark this on our smaller time frame. This is our key rejection area. Rejection. It's just not getting through this level, right? Then what do we see? These are our most recent lows. Yes, there's this here. These are our key lows, but this is our most recent price action lows. Now we see price come through, break these lows, and this isn't our 100% yet because to the left we've still got this bullish action. There's a little order block there. What's key now is the way price reacts to this area. So we've broken this, and then it's moved very slowly back up to that low. Now you can get in here if you're extremely confident and you've had a lot of thought go into this. You can get in here. You could even look to get in here, but it didn't come back up to there. But you're looking for sells here, right? This is when you go down to your 1 minute, break it down. Anyway, what's key that happens here? Price rejects this level very aggressively. Now, it doesn't only just reject it, it absolutely destroys it and moves down. Now, this is the key start of what we think is going to become bearish price action. Now, with this, these moves here, it's not 100% mitigated, but it has been, it's not as impulsive, it's not super slow, it's just clear bearish price action. Now, as we move down, we start now we're pretty clear. We're like, sweet, we're very bearish. We're conscious that price can, pump up to sweep these imbalances, but overall we're bearish. We're not looking for buys, we're only looking for sell opportunities. Now, if I can get onto this 1 minute and we can find where we were. Okay, alright, so this is where we were. So this is what we're looking at now on our 1 minute chart. After this pull down, which is what we saw before, that 5 minute close, the really strong bearish 5 minute close, push down, boom. This right here is our most recent high. This is our most recent high. Yes, it can come up to, rebalance this market structure, but this is our most recent high. What we want to do is we then get a box, and we draw this. Now, price isn't always going to react to your areas of interest, but it's just to help you visually get a gauge on what you're looking at. So, price has come into this area of interest, and it started to reject, right? It started to reject. Although we've had this bullish spike, that doesn't mean that much unless we're having a bullish spike through a high, right? And it's destroying a high. Then you're looking at, okay, we might have a change in direction. We might have all of these things, but this is also just 1 minute noise. So these high volume moves don't represent too much in the overall scheme of things if they're not, following proper market rules. Anyway, the spike up is probably just a sweep of liquidity through this level. Now it's rejecting. First rejection there. Price tries to move up, it's rejected again, tries to move up, it's rejected again. Now, a trap that can happen here is this massive bearish or bullish candle. It's like, sweet, let's get in on that for some buys. Targeting up here for a rebalance. Can occur, but is less probable because of the current market conditions. So we're looking for sell opportunities, right? So although this is recent, this is the most recent break of structure, right? This red candle right here is our most recent break of structure, right? Broke there, made a new low, made a new high, made a higher low, high, but that doesn't matter because this is internal. You could look at this as external. Internal market structure, see how it's little moves that are slowly pushing upwards. The external high and the external low. This is just insider information. Inside internal trends. Anyway, it hasn't been able to break this low, and our entry would probably look, even though we've had a break of structure, you're never 100%. You're looking for as much confidence in your way. We're looking for you could either enter here, if you're very confident with your setup, you're looking for something like this. Targeting the low. That's what you're looking at. All right. So you got in on the 50% mark of this thing. What can happen is this fear. Look how much drawdown you're in. You're in over half your position drawdown, almost 3/4 of your position in drawdown. That can be very daunting, especially after having this volume and being conscious of this potential outcome. Now, what I'd say gives you the exact same entry, but is a lot more, it's a lot safer, is you draw this zone and you wouldn't want any candle close. You'd wait for the price action to either break this low and then you get in on the break, or as you can see here, price is still moving up. Price hasn't been able to break any lows. Although it's respected this level, it hasn't shown, strong bearish volume. So what I personally would wait is we see this, even though there's this nice bullish volume, it's not closing above this high, right? Now, our big confluence here is 1, doesn't make it above the high, 2, has an engulfment rejection of that candle. So that's showing us that this high right here and this level is strong. This level isn't budging. And now volume like this massive red candle, this almost never occurs. You're not going to get trades that literally go enter, take profit. It never happens. But this was just a good model for that. Now let's move on to something else. Let's try this again. Jump on our 5-minute. Now what we're looking for here is still a good sell opportunity. So look at this. What we're seeing here, so this is where we were, that's the strong move. What we're seeing here is a massive, massive, massive break of the most recent low and then a continuation. Now, this area here was a consolidation and like an area for the sellers to create some liquidity to get another strong move down, right? But what this doesn't look out for is that there's all of this bearish imbalance right here, and like I said before, it's a little order block before that. A green before massive red is usually a pretty solid order block. That's just how it looks. That right there is almost perfection on how an order block should look, right? So this whole area right here, that is an area of interest. This whole area right here, it's not invalid until it breaks this high, and you might get in here and then it goes all the way up to here, and there. It's only invalid when it breaks this high. So you're still looking at pretty solid information. Now what we're doing now is we're going on to that 1 minute, and we're looking for something to be like, yo, buy, or sell, I mean. Here we go. All right, so we're here. All right. So what do we know? We know our overall direction is bearish. We know that there is imbalances above this level, and we want this to be filled before we can enter. Because if we're entering for sells down here, it's just very risky because this is unmitigated price action. Like there's so much imbalance to fill that at any moment price can spike just to grab it, and then anything. You're out, price continues in your direction. You're crying, you're sad because you've just been shit on by the market. It is what it is. Now, price has come into this area, and now I'm going to show you how we would react to this. Yes, our overall thing is bearish, but we're never 100% on point. So what are we doing? Boom. Reaction at that level. First good sign that we're on track. Right, next. Then what do we have? Imbalance, and it's rejected this, right? Oh, it's moved up and it's made a high low. Now this is where we're looking for our entry. Made this high low, but key point right here, unable to make a higher high. So price stops here. What does this move do? Boom, breaks the low. Now this is our first key sign that price is content with this level and is going to start rejecting now. So we're looking now for an entry on the retracement. What is that right there? That is our green candle. Boom. How does price react to that? Beautifully. Now, a lot of the time, if you've had an area of interest get rejected, rejected successfully, lower high, broken the low. Boom. If you're happy with that, get in right there, stop at the high, target, target the low. Boom, you're looking at a nice 1 to 3, pretty good. You can get a better entry than that, right? We can get a better entry than that, one that has stronger confluence, one that's just better, right? So we're looking here, markets like that, markets pretending it's like that. Boom, we've had this big strong pullback. Then we have these candles come through. Then we have this big red close. Boom, big red close. That's important. Big wick, strong red close. Now, this movement is what we're wary of. So there's a little imbalance right in here that price is reacting to show us that the seller's strength is stronger than the buyer's. Even though it's reacting to this level, what we do is we count the seconds on the side, because each candle has a countdown, and we're looking and waiting for our bearish close. Now this candle right here closed bearish. As soon as it closed, and if it stayed red, I'm in. I'm in because it means that we're respecting this level far more than we're respecting this level. If there was some crazy spike off this level, boom, you've just been stopped out. But we've waited for a red close to show us that this is now going to be a bearish trade. Now, there are two smart options. There are two options. Yes, we're looking bearish, but you never know for sure. Big moves like this can be daunting, and there can be a lot of hidden bullish volume that's just waiting to stop you out. So you can either target this low right here, just for a quick exit. What's that? 1.17. Trash. But it's still money in the bank. It's a quick scalp. It's simple. It's very easy to hit, take profit, and it's very reliable. Or we can go a little bit more realistic and target these external lows. Now, what I was saying before about internal lows and internal lows is these are your internal highs, internal low, internal high, internal low, internal low, internal high, internal low, internal high, like that. But that's our external low, our external high, our external low. These are the proper lows that are respected. So we're targeting this low right here. Boom. Price has come down. It's come down, pushed up, rebalance the market, push down again. You can even, to increase the risk to reward on this, if this candle level is being respected, you can even put your take off of your wrist like that. Now, this is all about how you're able to improve your intuition, improve your ability to manage risk, your ability to identify good A+ setups. That is how you'll grow and be able to, reduce your risk from that to that. You can even start doing it like that. But that's crazy. I would never do anything like that, because that gives you no margin for error. If you're slightly wrong, you're screwed. But you've just hit a 16 to 1. That's impeccable, unlikely. Anyway, got a bit off topic. This is my first ever video. It's going to be unedited. It's going to be the way it is. The whole point of this was to show you guys how to do area of interest, but I ended up just fucking showing you the importance of just fucking everything, eh? But yo, if this was helpful in any way, just drop me a follow. That would be, or a subscribe. That would be huge. I'm gonna try and make more content like this. Try start getting a little bit more niche based, more on target, so that we're not baffling like I was. But yeah, there's a lot of key information in this head, and I hope to be able to convey it out to all of you so that you can get gangster at your trading. I can get gangster at my trading, and we'll be doing good together. So, yo, thanks for listening if you made it this far.